So we got some more bad news today in terms of mass layoffs. Block, a tech company that is actually owned by Jack Dorsey, who is actually the original founder of Twitter, now known as X, actually is laying off about 40% of their workforce, or nearly half. This was just announced today, as of me recording this, February 26, 2026. And their stock actually went up. It skyrocketed after they announced this. So the amount of employees that they're laying off is actually more than 4,000 employees. Again, almost half of their entire headcount, which is around 10,000. Their shares skyrocketed more than 24%. We're going to go over that in a second. He's saying that it can enable them to move faster with smaller, highly talented teams using AI to automate more work. This is exactly what everybody's been worried about. So the actual quote here is from Jack Dorsey himself, the co-founder and CEO of Block. Today we shared a difficult decision with our team. In his letter to shareholders, he said, "We're reducing Block by nearly half, from over 10,000 people to just under 6,000, which means that over 4,000 people are being asked to leave or entering into consultation." Their CFO said the job cuts will position the company for their next phase of long-term growth. They said, "We are choosing to shift how we operate at a time when our business is accelerating, and we see an opportunity to move faster with smaller, highly talented teams using AI to automate more work." So it's literally straight up AI. They had a total of about 10,205 employees worldwide as of the very last day of 2025. So they are in fact right around that 40% number in layoffs. So we've seen quite a few layoffs over the past few years in relation to AI, and quite a few at the beginning of 2026 already. But 40%, that has to be one of the largest percentages of an entire company's workforce. That's a publicly traded company, and a very well-known one at that. I mean, we've seen people freaking out when a company lays off like 10%. And what's crazy about this is Wired.com actually had an article about this not long ago, and they estimated that layoffs would be something like 10% of the company's workforce. And that was according to a report by Bloomberg. It was 4 times what they anticipated the layoffs to actually be. We've also had some quotes on some of these articles talking about how bad morale was before this was announced. Morale is probably the worst I've felt in 4 years. One employee said, the overarching culture at Block is crumbling. Quotes like that are obviously not good to hear. Now, I want to point out something that could also be very concerning, because it's not just what Block is doing. Block is just one company. It's obviously terrible, and we obviously feel bad for the 4,000 plus that just got laid off in an already really tough job market. But the problem with this is Block is a publicly traded tech company. As you can see, they were up 5%. After hours, they went up almost 27% after hours. It's still climbing right now. So they're actually up more like 30% altogether. We'll see how the after hours ends up as soon as the market opens the next day. But either way, they are basically getting rewarded for laying off 40% of their employees. That's essentially what's happening here. And so other publicly traded companies are going to see what's going on. And if they're missing on their earnings, or their stock has been kind of treading water for a while, or just not going up much, they'll see what Block just did, and they'll be encouraged to do the same thing. They'll say, well, we think we can operate with a more efficient workforce using the power of AI, and so therefore we are also going to lay off thousands of people, or half of our workforce altogether. So it's not just about what one company just did, it's about the trend of what's going to happen with all these publicly traded companies that are constantly worried about their share price. Now, as far as overall unemployment in the U.S., it held nearly flat, around 4.3% in January. But the thing is, we have these like seasonal revisions. So sometimes we'll hear, oh, these numbers are actually encouraging. And then they'll revise them down by like hundreds of thousands of jobs. And they're like, oh, no, it was actually horrible. So it's hard to really even trust the numbers, especially if it says they're good or like okay in any sort of labor market report right now. For instance, when it comes to revisions, It says right here, according to the Bureau of Labor Statistics, around 862,000 jobs were cut from March 2024 to March 2025. So the market was actually much weaker than initially reported. And so this, of course, has to do with revisions that are made later on. So a lot of times you can't even believe the initial numbers of the job market right now. We've also had quite a few other tech layoffs this year, as well as other companies. Amazon apparently has cut about 16,000 in 2026 already. Meta around 1,500. Salesforce around 1,000. Pinterest, a major social media platform, around 670. Oracle, potential 20 to 30,000. That's a report that Oracle is considering massive cuts to fund AI data center expansion. So that is potential. That hasn't actually happened. So we'll see what happens with Oracle. They actually have a chart on Reuters.com that's been tracking this. So if you want to check it out, you can check out this chart here. It's called The Corporate America Continues Job Cuts in 2026 and its Efficiency Push. So you can check that out, and they're updating this chart with who's been doing mass layoffs lately. Some of these we actually get a percentage, like it's 26%. Or we'll get like, sometimes it'll say a percentage and they won't tell you exactly, like Peloton, 11%. We don't know exactly how many people that is. And then you have like UPS, 30,000, but we don't know what percentage of their workforce that is because they have a huge workforce.